What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at the Bitcoin network. We're going to look at several different metrics, which are going to help us to kind of formulate an idea of what is the likelihood of us going down and having another large capitulation event from where we're at right now. Because of the macro events going on at the moment, we have things like the Bank of England having to basically prop up its bond market. It's then taking the unprecedented step of quantitative easing while it's raising interest rates because of the fact that the bond market nearly just collapsed in England. We have the US performing quantitative tightening while raising interest rates, which is basically putting the entire world's economy behind the eight ball, because as the strength of the dollar continues to increase, as the interest rate differential between the US and much of the rest of the world continues to increase, you're going to very likely see the DXY continue to rise, which then puts pressure on foreign economies, foreign currencies, and a lot of the risk assets like we see with Bitcoin. So in today's video, I want to look at the characteristics of the Bitcoin network. And what I mean by that is we're going to take a look at basically the entire distribution of the holders of the Bitcoin network. Because when we look at this network over time, we see that we have a lot of holders who are in it for the long run. We have a large number of holders who have now held this asset for up to 10 years or even longer than that. We also have a large number of holders that came into this network during the bull market, and they're kind of sitting at a massive loss right now. So we're talking about people that basically bought from 30K all the way up to 69K. So we're going to look at the distribution of these individuals, because looking at this and what their behavior tends to be can go a long way to show us what is the likelihood that we will see another large capitulation event from where we're at right now. So if you guys like this type of content, don't forget to hit like and subscribe. You could also head over to the Discord channel, where we do a lot of discussion of the macroeconomic picture right now. We do a lot of talk about what's going on in the economy, what's going on globally. And you could sign up for all of the risk models that I put out, as well as any of the trading view indicators that I make. They're all available for free on the Discord channel. So with that said, guys, let's do it. So what we're going to start by talking about today is this here. So this is a chart showing us something. And what we'll do actually is we're going to hide this part of the chart here, because, it's just going to be confusing if we start by looking at that. So what we have is this chart over here. This is what we need to explain. This is showing us from 0 on the far right, so you can see 25%, 50%, up to 100%. This is showing us at any given price range what percent of the supply is held at or below that level. So what I mean by that is, if you look here at, say, $10,000. So at $10,000, you'll see that the red line intersects right here at 50%. So that means that 50% of the Bitcoin supply is held at or below $10,000. And conversely, if you come up here to $69,000, the very top, well, we know that that was the highest price that Bitcoin has ever gone. So 100% of the supply is held at or below that level. And that just makes sense. You can't have supply held at a price that we've never been to before. So if we bring that over to the price chart, you can see that this is showing us the entire distribution of where Bitcoin is held and at what price. So a few things start to become apparent here. Let's start by looking at the 50% level. So 50% of the supply is held at or below $10,500. And that's what I have marked right here. You can follow this up. You can see basically how much of this total supply of Bitcoin is held at any given price level. So as this red line is moving farther to the left, that means more and more of the supply are going to be held at that level. What's interesting is, if you look, there's actually 25% of the total Bitcoin supply is held at or below $750. So that means a huge amount of the Bitcoin supply is held back at these ancient prices, all right? And so we're talking about people back here in 2016, people back here in 2015. These guys own 25% of the supply. In fact, if you really look at the numbers, a large percent of the supply, about 10, maybe 15% of the total supply, is held at about $30 or lower. So there's just a giant amount of coins sitting at those very low prices. These are original investors. There's a lot of Satoshi coins at that level. And these guys are just guys who basically are sitting on their supply. And what you'll actually see when you kind of really dive into the metrics, which we're not going to get that specific today, but these guys do sell. Not Satoshi, obviously, but the guys, the sort of the OG Bitcoin investors, they do sell. We see basically, once a month or a couple times a month, maybe once a week, a small number of coins being sold back at these $30 levels, back at, $100, $50, $200. And that's because those guys are taking profits. They're set for life. They are set for life, and they just take a small amount of profits every single week. And when we say small amount, we're talking, millions of dollars these guys are making, and basically converting from $30 Bitcoin into $30,000 Bitcoin. They just sell every week. And it really doesn't matter. It's at $20,000 right now. So they just sell a bit more. The difference between $20,000 and $50,000 Bitcoin for them is rather arbitrary at this point, because they are essentially just selling a small number of coins, but for them, they have thousands of coins, all right? So they're just taking small amounts of profit along the way as we go through time. And those guys are just going to continue to do that for the rest of time. For as long as you and I are alive, we'll probably see a small amount of coins in those distributions continue to be sold. So those coins are going to be sold in very small increments, no matter what. So that brings us to the next quartile then. And we're talking about the coins between the 25th and the 50th percentile. And this is an interesting group here. These coins are held from around $800 all the way up to 10K. And so we have 25% of the total Bitcoin supply held between prices that occurred from the small amount of time back here in December of 2013, all through the bull run of 2017, and then all through the bear market of 2018 and most of 2019 and really parts of 2020. So we have a large number of coins. And if you think about it, there's 19 million coins or so. We'll round that up to 20. That means we have around 5 million coins sitting down in these levels, and we have about 5 million coins sitting in these levels. Now, the coins sitting in this range, in this $800 up to around 10K, that's more of a mixed bag. We don't actually typically see a lot of selling coming from this range. These guys have been sitting on their coins. Many of them who bought in this bull run here, many who bought in this bear market here, and many who bought in the COVID capitulation event, and specifically down here at this 2019 capitulation event. We haven't seen a ton of these coins move. All right, so we have a large number of coins in this range. Then we go up to this next range. And so if you look here, in a $10,000 price range, we have approximately 50% of the total supply. So from $0 up to 10K. And then this is interesting, from 10K up to 69K. So a $60,000 price range, essentially, we have another 50% of the supply. And so we have this next quartile here from 10K up to 40K. We have another 25%. And then this is the group right here that, we commonly and, lovingly refer to as the dumb money. These are the coins that are sitting from 42K up to 69K. And unfortunately, like I always say, in the cryptocurrency market, almost everyone is the dumb money at some point. When you first come into the market, it's very difficult to avoid being a part of this group. Unfortunately, we have a large number of people holding the asset in this price range. And so these are typically going to be less experienced investors, or at least less experienced cryptocurrency investors. So we have this large group in 40K to 69K ranges, and these are going to be essentially our primary risk for selling. But you're also going to find that in general, these are going to be retail investors. So if you think about this in terms of dollar amounts, if we have 25% of the supply held at an investment of 40K up to 69K, in terms of dollar amount of investment, this is a massive amount of money that was invested in this range. And much of that has now been destroyed. So these people are down anywhere from 50% down all the way to, if we just measure from the top where we're at right now, we are down around 70% or so. So, you see that essentially there is a huge loss of wealth that has occurred because of investments in this range. And so that becomes a sort of a double-edged sword, which we'll talk about in a bit. So that is essentially laying out the primary focus of what we're going to be talking about today. This gives you the framework for understanding kind of what the distribution of the network is. So from $0 to 10K, we have 50% of all coins, all right? 50% of all coins. And then from 10K up to 69K, we have an additional 50% of all coins. So I want to show you this, and this becomes very interesting then. Where is the selling coming from? Who is really our risk of selling right now? And we said that it's, in large part, it's going to be somewhat less experienced investors, or at least less experienced cryptocurrency investors who kind of bought in at these price ranges from 30K up to 69K. And specifically, we want to look at these guys who are bought in at around 40K up to the top, because they represent 25% of the supply. So we have, again, this chart right here, which is showing us where the supply is being held at. And now what we're doing is showing you where have the largest blocks of selling come from. So we have all the way back here, we have data all the way back here to essentially 2013. And what this shows us is where have the large block selling orders came from. So what I mean by this is these are going to be areas where a single wallet has sold a large number of coins. So retail investor selling isn't really going to register on this chart. What we'll catch here is either high net worth investors or institutions. So the first thing you'll notice is where's the most of the selling coming from. This blue area right here, this is short-term sellers. They are selling all the time. The vast majority of the buying and selling on the Bitcoin network every single day comes from this area. So we're looking basically at the last 90 days. These are short-term sellers, traders, swing traders, algo bots, etc., day traders. They're these kind of individuals. And we just have a massive degree of selling and buying that goes on in this range. So it's not even worth trying to pinpoint what's happening there, because it's always happening and it's in such large levels that it by far dominates the activity on the network every single day. But what we can see then is these other smaller areas, okay, these yellow areas, and these represent where the selling has come from over the last 30 days. And what you'll notice is we have barely any selling coming from older timeframes, from these older coins. We do have some here. Back in, someone who bought back here at $950 back in February of 2017. We do have some here. Someone that bought back in December of 2013. Okay. This is someone who's been sitting on this asset for 9 years now. The key point here is you'll see that there's very little selling coming from people that have bought the asset in all these other price ranges. Where is the selling coming from? So our selling is coming from people that bought the asset where? In the less experienced investor range. These aren't long-term investors. These aren't people that have been, holding Bitcoin for 10 years, for 5 years, for even 2 years. These are people that have bought basically within the last 2-year period. So anywhere from September of 2022, if we go back basically through September of 2020, the almost 95% of our large volume selling, if not more than that, probably closer to 98 or 99% of our large volume selling is actually coming from these investors here. So guys that bought the top, they bought the top back here in April of 2021. They, bought this price run right here in September of 2021 and then didn't sell when it got up to 69K because YouTube, if these guys are watching YouTube, I don't know. But someone was telling them that, the price is going higher in spite of the fact that the macroeconomic circumstances were deteriorating right in front of their face, in spite of the fact that we were losing all of our critical TA levels that we were talking about on the channel ever since November and December. These guys then start to capitulate. And remember, this is key. These guys sold within the last 30 days. And, if you want to take a bet, where did they sell? After we fell down from 25K, right? Because this is the last 30 days. So we're really looking back to essentially the beginning of September, right? So they thought that, it's like people just won't learn. They won't learn how this asset works. Remember, Bitcoin is a risk asset. It's a risk asset. When the economic circumstances, when the temperature of the economic environment looks terrible, you're not going to see a risk asset go on any sort of prolonged price move. And I'll just say that matter of fact. I've been saying that matter of fact now for almost a year. No one wants to listen because no one watches the channel, but it's just very obvious what's happening right now. So we see all these people capitulating because they were hoping this Ethereum price run would take them higher, maybe get them closer to their cost basis. So for a lot of these guys, you'll see the selling is coming from people who were buying on the way down. because they thought that the price would turn over once we started to get to, 47K. And you'll notice that a lot of them bought right above this inflection point right here at around 41K. We have a lot of large block selling from people that bought right at that 41K price or higher. So these are all what can be considered capitulation events. They bought at a higher price, and now they're selling at least a 50% loss, most of them. And you also have a lot of capitulation here at the 30K level, because again, YouTube telling everyone we can't ever go below 30K again, when it's obvious that we can. Every single metric, if you just open your eyes and take a look, every single metric is telling us, yes, indeed, we can go down to 20K. The reason I'm showing you this is to lay out, where is our selling coming from? Because the majority of our selling on this network is not coming from these old hands. It's not coming from the guy who bought in 2017. It's not coming from the guy who bought in 2013. Hell, it's not even, we don't have any large block selling to take note of here from 2019 all the way through basically the middle of 2017, nor is there any from 2014 to really 2015. In spite of the fact that I just showed you, 50% of the supply is held at or below this level. 50% or lower are the smart money. These are the smart investors. And are they selling? No. Who's selling? It's the noobs. That's the bottom line. Okay. So we see most of the large selling is coming from guys up here. So if we cut back to this chart quickly, we can see then where the risk of selling comes from. And it comes from typically these smaller investors. Now, obviously we're looking at, what the selling that we're looking at here is going to be higher net worth investors, because, if you're selling 250 Bitcoin that you bought at, at around 50K, you can do the math. That's a lot of money. So it's not like this is something to sort of bulk at, that these guys are just small fries. They're not. They have a lot of money. It's just the fact that for, one reason or another, they weren't wise investors, at least as it related to Bitcoin. So we're seeing that these are the guys who are creating the sell pressure in the network. It's not these guys. And, if we really go back all the way back to 2011, 2012, 2013, there is sell pressure coming from them, but it's to a much smaller degree, because that pressure has always been there and will always be there. They will always continue to sell small portions. You very rarely see a massive block of selling coming from coins that are older than 2013. Okay, so their selling is going to be continuous, and it's going to be essentially static, more or less, unless something were to drastically change. Okay, so that brings us to kind of the last thing I want to look at, and then we'll talk about essentially where this leaves us. This is the coin days destroyed. And what this means is, if you have a coin that you've held for, let's say, 365 days, and you sell it, you destroyed 365 coin days. Okay, so this takes all of the coins, it looks at their age at the last time that they moved, and it tells you how many days were destroyed on any given day. And you can see that where we're at right now, we're actually at by far the lowest level that we've been at throughout this entire bull run. So if you go all the way back to here in June of 2020, that's where we were last at this amount of coin days destroyed. And that was right before the bull market. Now, I'm not implying that we're at a bull market. That is not what this means. But this just gives you an idea of the last time that the network was kind of this quiet. So we're at a place right now where, there's obviously not a huge degree of acquisition going on. People are not accumulating coins left and right, hand and fist. If they were, we'd see the price going up. So what you're seeing is you're running into a place where the selling on the network is drying up. And I want to show you this specifically. So when we look back here at 2018, notice that as the bull market continues on, this level rises. Coin days destroyed rises. And the same thing in 2020. As the bull market continues, coin days destroyed kind of reaches a peak, and it reaches a peak, right? In order to get a large number of coin days destroyed, old hands are selling. Old hands are the ones that can rapidly make high numbers of coin days destroyed. And why is that? If you own a Bitcoin for 1 year, that destroys 365 coin days. If you own a Bitcoin for 10 years, that destroys 3,650 coin days, right? So these super old coins that are destroyed lead to this huge amount of coin days destroyed. And that's for the fact that older coins accrue more coin days. And so when they're sold, they destroy more. And the other thing that's important here and critical, smart money are the guys who hold for a long time. When do they sell? They sell in the bull markets. They sell in the bull markets. They're selling here and they're selling here. Then you see the coin days destroyed rapidly fall off. And we know there's capitulation. So why are the coin days destroyed falling off if people are capitulating? It's because the only people that are capitulating are the dumb money, the retail investors. So as we're moving this way, as we're moving into the bear market, coin days destroyed. Look, I mean, just line it up here and we'll get rid of these so you can see. As we're moving into the bear market, what's happening to our coin days destroyed? And you can see that same line, our coin days destroyed plummets. It drops off a cliff. It goes from around, and you have to look at this label here, not over here. This is the price. It goes from around 37.5 million all the way down to around 7 million. And notice where it bottoms though. And this is also an important point to make. It bottoms out right here. It bottoms out right here. Okay. So we're talking at a price of around 6K, but we have a large capitulation event. And what do you notice? A large number of coins are destroyed right here. And this makes the most important and perhaps the most critical point. The reason that we had this capitulation event, it's because a large seller, a whale, came in and destroyed a huge number of coins right here. So a whale capitulated. And when a whale capitulates, that creates a flood of Bitcoin, in this case, onto the market, and thus creates a huge change in price, a rapid change in price. That's exactly what we see. Our coin days destroyed increases rapidly, and our price falls dramatically. That is not because of retail sellers. The retail sellers are not the ones causing this type of move. So the coin days destroyed rapidly increases, the price rapidly falls because a whale or a few whales are the ones doing the selling. And from there, what happens? The coin days destroyed rapidly falls off again. And what do you see? Well, as we're moving into this mini bull market, our coin days destroyed again starts to rise. And that's because old hands are again taking profits. Anytime we see the price go on significant rallies, you see that old hands will start to take profit. And that's exactly what we saw again back here. And then what happens? Our coin days destroyed falls off. And that is where we're at again. We are down at this bottom level, down at around 7 million. This brings us back to our original point. What is the risk right now, where we're sitting at, of there being a huge additional capitulation event? So we have two things to then consider in depth. The first is the fact that we have this huge number of retail investors. And you can think of retail investors as kind of, they're going to be reactive. Retail investors will not cause the panic. They may cause the price to sort of fall from 64K, 69K down to these lower levels. That may be them, but they are not going to be the ones once you're kind of at these levels at 20K. You're not going to see them being the ones who kind of create this massive panic selling to the downside. That leaves us with these guys who are holding in here. And you know, we do have more institutions now involved in the game that are holding up in these levels. And the reason that I tend to believe that it's still very possible, if not probable, that we could see a further price move down to these lower levels, down to this, say, 50% level, which is at around 10K, is for the fact that, you know, you do have these investors now who own down here at like we said, they're now millionaires, multimillionaires, they're worth now hundreds of millions of dollars, if not billions of dollars, because of their investment in Bitcoin. And they've just been sitting on this asset for years and a decade or more for some of them. And so the worries that they may have had when they were just a simple retail investor have now shifted. They are now in the category of individual who's in a place where they are now protecting generational wealth. And because of that fact, I do think that as the situation deteriorates more and more, it increases our risk from seeing these people, or at least some of them. Remember, this event that happened back in 2018, where we went from 6K down to 3K rapidly, if you look at the history of the event, that was because of just a few investors. So imagine now if, we have the same type of event where 1 or 2 or 3% of the supply instantly came onto the market. That could have a devastating effect on the price, because we're talking about, millions of coins being flooded onto the market rapidly. Now, I'm not saying that any one person necessarily has that many coins, but if something were to happen, if some sort of panic event were to happen, and trust me, Bank of England's bond market nearly going insolvent is on the order of magnitude of that type of panic event. That's kind of what my rationale for thinking about this market is right now. And that is sort of why we are at risk at the moment. It's not from these guys. They will sort of pile on and cause more selling to happen. At least some of them will. But it's going to be from these guys who are in a position where they need to now protect generational wealth, because they've accrued that over time by holding one of the most profitable assets that the world has ever seen for a decade or more. And that becomes the major risk that we face as investors at the moment, is a deteriorating macroeconomic picture and the pressure that that is putting on these high net worth investors, and the probability that they then go on to sell or to capitulate. It's not really capitulation, since they're making the types of profit that they're making, but that they liquidate this asset in an attempt to protect their wealth because of fear of what is happening in the market. So this just gives you a framework with which to think about at least what our risk of selling off beyond this level. And remember, it does not take a lot of investors to sort of run for the exit in order to get a huge price sell-off. Okay, so that is kind of where we're at right now. And that is my fear for why we could potentially see the price move down to 12K or potentially even worse. A lot of people never believed we could get to 20K. We made a video way back at the beginning of the year talking about 20K is possible. People didn't want to hear that crap. People want to live in a fantasy land where they don't align their expectations with at least the possibilities of reality. So that's what we do on this channel. Our goal here on this channel is to approach the markets from a standpoint of reality. And the reality is, you are living in a time right now where the macroeconomic circumstances, if we don't say that they've already deteriorated to the point of perhaps no return, they're very close to it. And, depending on how things play out over these next couple months, you could see things continue to get worse and worse. Things like I just talked about, where the dollar is putting pressure on all of these other economies around the world. As it's strengthening, their debt, their cost of debt essentially increases because it's driving the value of their currency down. As all the money is moving towards the dollar, it's making the cost of their debts increase over time. Their debts are denominated in dollars, so that causes them to essentially be losing value on their currency, and the cost of the things that they need to buy, or the debt in this case, is increasing. So imagine if you had $100 and I take half of it away, and you have $100 in debt, and then I increase your debt to 150. There a mismatch occurs at some point, and that's essentially what's happening for them. So essentially, guys, this is my way of thinking about this market. We're sitting at $19,300 at the moment. Our risk of a sell-off, in spite of the fact that we're seeing a lot of the selling coming from up here and we're not seeing much of the selling coming from down here, this is where our risk lies. This is where these guys are small fries compared to what's going on down here. When you have, 25% of the supply sitting in an $800 range, those guys can wipe out the market. These guys aren't coordinated. They're spread amongst thousands of investors. These guys are spread amongst a handful, not quite literally a handful, but a relative handful of investors own the asset down in this level, versus the masses. The plebs are up here, the whales are down here. All right. So that is where our risk lies. A whale or a group of whales attempting to protect their wealth, their generational wealth that they've generated, attempting to protect it, and in doing so, crashing the price of Bitcoin. Now, I don't know how far that drives us down, and we'll need to reassess as we go on, but we'll continue to watch this. We'll continue to watch to see, does this value change? Do we see this 25th percentile start to move up here? If we do, that means we're seeing that the whales are selling. And if you see that, if you do in fact see that this 25th percentile starts to move up this way, you're also going to see the price the price is going to be essentially inversely proportional to this value right here. Okay. So this bar is going to essentially set the limit for us. If we see this rising, you're going to see the price come moving down towards it, because that means the whales are selling. And when the whales are selling, that means the price is going to move down this way. So if these two lines start to converge, that will mean that we're in a lot of trouble, at least in the short term. The saying, this too shall pass, I do believe that. I do believe that Bitcoin will remain to be a worthwhile investment in the long term. But in the short term, the macroeconomic picture is what it is, and we have to face it head on. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.